What's up guys, Jgraph back at it again with another M1 Finance and Robinhood portfolio update video. As you all know, before I start these videos, I usually like to hit you all with a rap lyric. So today my quote is going to be from Kevin Gates, who once said, "Anything lost can be found again except for time wasted. A vision without action is merely a dream." So with that, let's stop wasting time and let's get it. Alright guys, so here we are in the M1 Finance app. Those of you all who are already subscribed to the channel, you already know what this M1 Finance portfolio is all about, and that is growing dividends over time. For those of you who are not subscribed, make sure you hit that subscribe button down below, and for all of you, make sure you hit that like button if you enjoyed today's video. So with that, I'll go over how my portfolio has been doing lately. So over this past trading day, I'm down 0.53%. Over the past week, I'm up 2.2%. Over the past month, I'm up 1.22%. Over this past quarter, I'm up 3.87%. And all time, I'm up 10.4%. Now, I started this portfolio back in early June of 2019, so that should give you all an idea of how this portfolio has done since then. I've been steadily adding money into it, usually on a weekly basis. I usually try to add $10 here, there, $20 here, there. You all get the idea. So this week, I'll show you all the dividend payments that I have received. But before I show you all that, I want to show you all, I did receive a referral bonus from one of you all signed up using my link. Whenever one of you all signs up using my referral link, we both get $10 to invest in M1 Finance. So I really appreciate whoever signed up using my link. And if any of you want to sign up using my link, I have left it down below in the description. So looking at these dividend payments over the past week, I got 7 cents from Chatham Lodging Trust. I got 6 cents from Gladstone Investment. I got 4 cents from Gladstone Land Corporation. 5 cents from LTC Properties. 15 cents from AT&T. 11 cents from Verizon. 6 cents from Lowe's. 7 cents from General Dynamics. And 5 cents from Pentair. So these dividend payments are slowly but steadily growing over time, just what I wanted to happen when I started this portfolio. Very happy seeing these dividend payments from growing from being in the usually 3 to 5 cent range to now many of them are above 6 or 7 cents. And I do hold 100 different companies, so I'm receiving a high volume of dividend payments, and even though they aren't a lot, each of them are usually around 10 cents or so, just with the frequency I'm receiving them, I feel like it's slowly but surely starting to build up. So we'll look at my best and worst performing stocks in this portfolio all time. We'll sort by total gain. So the best performing stock shouldn't be a surprise to any of you all. It's Apple. Apple has been on a tear this past year, and it is by far my best performer. Intel is second behind that. It's returned 50%. It's another technology company that has just done very well. Apple, Microsoft, Intel, a lot of tech companies have all done pretty great this past year or so. And then the next one is kind of a surprise. Abbvie has actually returned close to 44% for me. So Abbvie, a while ago, they bought Allergan, which is another company. I think Allergan specializes in like Botox and stuff like that. So they bought Allergan, and I think initially a lot of analysts did not like this purchase. They didn't like that Abbvie was buying Allergan, and the stock went way down for a little bit. And I think I picked up the majority of my shares around that time, which is why Abbvie has performed so well for me. Now, while I have some stocks that have done pretty well, I also have some stocks that have been pretty mediocre for me. So my worst performing stock is Interplus Corporation. I think what I'm going to do is continue to dollar cost average, pick up more shares where they're at a lower price range. And the benefit of that is I'm going to get a higher dividend yield from these shares that I buy while the stock is down, which is the one benefit of this company's going down in value. Anheuser-Busch has not done too well for me. I'm down 23% on it. And Exxon Mobil is not doing too hot either. Exxon Mobil is actually a company that I own in a dividend reinvestment plan. So every quarter I get a letter in the mail saying that the dividends from the shares I own in Exxon Mobil, they've reinvested those dividends and bought more shares of Exxon Mobil. I used ComputerShare to set up this dividend reinvestment plan, so no, it is not part of M1 Finance, but I've enjoyed it so far. It's kind of cool watching those dividends accumulate and grow over time. I didn't put a whole lot of money in there, but like I said, it's a fun little thing to watch. Now, the value of my shares that I bought in there, I think I bought most of them at around $75, so I'm probably down quite a bit on that. But the plus side of that is because those shares are so low in value, now whenever I receive my dividends from Exxon Mobil, those dividends can buy more shares, which means my dividend payments will grow faster. So, like I said, I've talked about this before on the channel, but just because a stock goes down in value that you hold, it's not always a bad thing. It's not the end of the world. It is potentially a buying opportunity for you, and you have the potential, if it's a dividend stock, to pick up more shares at a higher dividend yield. So with that, I think I'm going to wrap up what I have to say about my M1 Finance portfolio, and we're going to move on to my Robinhood portfolio. All right, guys, so here we are in my Robinhood portfolio, and those of you who are new to the channel, I have just been slowly investing in Robinhood for about 2 or 3 years. I usually like to do some research, find some companies that I like, and slowly build a position of those shares. So I'll go ahead and go over how this portfolio has been doing. This past trading day, I was down 0.43%. Over the past week, not doing too bad, up 2%. The past month, I am up 1.9%. Past 3 months, I'm up 8.23%. Past year, I'm up 19.7%. And all time, I'm up 23%, which I'm very happy with. So some of the news I'd like to talk about this week is I tried trading options again. It's a pretty low risk strategy. I think worst case scenario, I lose $50. Best case scenario, I earn $31. It's something I've been trying to learn about, and the best way I learn is by doing. I would probably be best served to do it in a paper trading account, but I figured I'd give it a shot. Like I said, I don't have the potential to lose very much money, so I figured I'd give it a shot and see how it goes. Now, the stocks that I want to talk about this week are Omega Healthcare Investors. This has just been a phenomenal stock for me. As you can see, it has gone way up. My average cost for these shares is $29.44, and not only has it gone up 45% in value, it also pays me some pretty awesome dividends. They pay 67 cents a share. So every quarter I'm receiving $3.35. And this dividend yield, it's like a yield on cost of, I think, 8 or 9%. So very happy with Omega Healthcare Investors. I've talked about it before, but real estate investment trusts have done phenomenally this year, I think due to some changes in the tax laws regarding them. The other thing I want to talk about this week is Exxon Mobil. So I touched on this a little bit in my M1 Finance portfolio, but they have not been doing great lately. As you can see, over this past year, they're down almost 17%, and this 5-year chart does not look good. They are down almost 30%. Still, they've been raising their dividends recently, and they still have a pretty nice dividend payment of 87 cents per share. I did do some research on this, and basically they have so much cash that they will be able to sustain this dividend payment for, I believe it's 3 to 5 years, even if they operate at a loss. So I like Exxon Mobil right now. I think they've been hurt by the low oil prices. I think that's been something that's really hurt them. I think it might be a buying opportunity right here. You would certainly be getting a pretty nice dividend, but at the same time, it almost kind of looks like you might be catching a falling knife, and Exxon Mobil might continue to go down. Their last earnings report was not too great. Personally, I would hold off, kind of wait to see where Exxon Mobil goes. before buying some shares, but I would definitely put it on your radar because I think it is a solid company for the most part. I think they've run into some hard times, and I think they definitely represent a value right now. But like I said, you don't want to invest in something that's just going to keep going down and down. So do your own research, of course, before investing in anything, but keep your eye on Exxon Mobil. So looking at the Standard & Poor's 500, I love looking at this index because it's a pretty good indicator of how the overall stock market is going in the U.S. And as you all can see, we've had some volatility lately. The stock market has been going up for the most part, and then we had that big dip a week or two ago. I think it was due to the fears surrounding the coronavirus. I'm very interested to see where the stock market will go here in the future. It kind of seems like we might be at a turning point where it may start to go down. It's very hard to tell. If I knew what direction it was going, I would be. I'd be very rich. I don't think anybody can accurately predict where the market is going, but I wanted to show you all that. Not too long ago, I picked up some shares of Standard & Poor's 500 high dividend, low volatility ETF. I'm excited to see the monthly dividend payments that has. It's probably my favorite monthly dividend ETF. So if you all like monthly dividends, it's definitely a good ETF to check out. I did buy one share of Energy Transfer this week, and the reason I did that is I actually traded an option on it, and I was able to make about $15. So I took the money that I made and I just went ahead and bought a share of Energy Transfer. Now it did drop almost right after I bought it because they did have a dividend payment. So I will be receiving, I believe, 30 cents here pretty soon. I like Energy Transfer. If you look at the 5-year chart, it's not too hot, but overall, it has a pretty high dividend yield. It's actually yielding almost 10%. Now, you have to be careful whenever you see a high dividend yield like that, because usually it means that the company is paying more in dividends than they're actually earning, or their growth prospects aren't too great, or there's some reason for that. A great example of that is Ford. Ford pays out 60 cents a share per year, and it's only trading at around $8 right now. I'll pull up Ford right now. They actually just had a pretty bad earnings report. People are just very negative and pessimistic on this stock, and I mean, if you look at the 5-year chart, it's just been going down and down and down. So like I said, always be cautious when you see a high dividend yield. Usually there's a reason that dividend yield is so high. So with that, I think I'm going to wrap up today's video. I appreciate you all watching. Like I said, if you enjoyed the video, please hit that like button down below. Please subscribe to the channel and hit that little bell down below so you get notified whenever I post future videos. So thanks for watching, and JGraph out.